Welcome back to Making Money Matter, ladies and gentlemen. My name is Kerry Stevenson, and I've asked Andrew Spark, that's Spark with an E, to join me. He's the managing director of Q Mines. Now, Q Mines have got the Mount Chalmers deposit up here, I should say, in Queensland. And what they like to say about themselves is they're a zero carbon mine developer, not an explorer, they're a developer. So we're going to get into that. I want to talk about the copper thematic, and there's a little bit of weakness in copper, little bit of weakness as a result in the Q Mine share price. And by the way, the ASX code is QML. They listed just over 2 years ago, put out 5 resources, which is ridiculous, but we're going to find out. Maybe that's why he's looking so young, because he can just get things out fast. Andrew, great to see you. Thanks for joining me on Making Money Matter.
Thanks, Kerry. Let's hope I keep that baby face, because I hear a lot of people. It goes with that
Stress.
That's it. That's the one. That's the one.
All right. So, but look, this is the first time you've been on the channel. So our audience out there are going to want to know 2 things. One, who are Q Mines, and why are you a good custodian to get this value for shareholders and potentially down the track get this into production? So let's start with a brief overview of Q Mines.
Yeah, absolutely. All right. So Q Mines is a pretty simple business. Okay. So we've got all our assets are in Queensland. Okay. And we're in the copper business. Okay. Why Queensland? Queensland has 13 copper mines. Okay. It's the second state by copper production in Australia, only second to South Australia. It really is the place to be, closest to China, lots of infrastructure, 7 ports up and down the coast. So when we built this business, we knew that the energy transition was on its way, and we just knew we had to be in Queensland. So we've got 2 projects up there. We're right in the middle of Queensland, but quite interestingly, right on the coast. So we're not in these, typical areas like Mount Isa and whatnot, where and Cloncurry and those sort of places. So we're very unique in that we're close to the coast. We've got a historic mine here at Mount Chalmers, which is a very high grade one. It's a VMS deposit. That's important because we think this has got a chance to actually get permitted and approved, right at the start of this cycle.
Why? Because it's a VMS deposit? Why is that important? Why is that important?
It's really important because it's a historic mine. The regulators are a lot more open to, we think, permitting historic, already disturbed sites. Okay, right, rather than greenfield sites and those sort of things. They'd rather permit and approve an existing mine or a re-establishment of an existing mine rather than these new greenfield sites. And this whole topic is becoming more and more important in mining. I'm sure many of your listeners will have heard, a lot of these mining operations not getting to production because of community issues, because of social issues, because of regulatory issues. And so when we built this business, a big part of the strategy was finding assets that we think could be permitted and approved, ready to benefit from this upswing related to the energy transition, right at the start of the cycle. And I think we've got it here at Q Mines.
Yeah, it's an interesting part of the cycle. We'll get into that in a minute. But with Mount Chalmers, how did you get your hands on it? And why wasn't it a continuing mine? If this has got what you think it's got, I just want to know a little bit more of the history.
Yeah, absolutely. So we actually bought it off a group called Trap Rock Mining. Okay. And they were, run by 3 very capable sort of technical guys. Effectively, they wanted some help to get it listed, and we had very strong, corporate and capital markets expertise. So we basically did a deal with them for all shares. I'm pleased to say that all those vendors, the 3 main vendors, are still large shareholders in the business. They've been great supporters, and they really believe in it. So we did a deal. I think it was late in 2020, and we listed it in May of 2021. So we're only 2.5 years old as a listed company, and as we'll talk about shortly, we've already pushed out 5 resource updates, 25,000 meters of drilling. We've just made a new acquisition at Devlin Creek, and we're flying on our PFS. So we're a management team that really likes to get things moving.
Yeah, and a bit about you, Andrew. You've got a capital markets background as well. I just want to know, and if you could share with us why you think you're a good custodian to take this forward. It's important for shareholders out there. And, I'm going to be honest with you, the share price, and I know everyone's struggling a bit at the moment, but Your share price hasn't been fabulous, has it?
No, you're right. Mining is a very cyclical business, okay, and probably one of the most cyclical businesses out there. So, just in answering your first question, effectively, I've come from the capital markets. I basically worked as an equity capital markets broker, putting a lot of these transactions together in my early part of my career. I worked over in Perth. I was quite lucky to work at a technical office over there, so I got to sit around the campfire with a lot of geologists, work a spreader on a drill rig, and all those things. So I got a really unique perspective. So I'm never afraid to get my hands dirty and whatnot. But after doing that, I ran a very successful resources fund for 5 years. So and that taught me a lot. So during that period, I think we saw about 6,500 management teams come through, mostly mining stocks. So what that did is it taught me a lot about the strategy of these businesses, the sorts of assets that that I think could generate some outsized returns, and the people and what it takes to really motivate a team and deliver business plans, a lot quicker than the average team. So I've got a really unique perspective. I've been on the inside of these companies as well. This is my third listed company. Our last one, obviously, a lot of people know, was a raging success. So we've done it before. We've developed, mines before. We just deliberately want to move into copper because we just thought that this energy transition was a great sort of backdrop to generate some really great returns for our shareholders. So
yeah, and it's an interesting time in the market. We'll get into that at the moment. But you used a word just before that I want to pick up on, and that was strategy. I would like to find out for our audience, what is your strategy for getting Qmines potentially into production? And I know it's early days yet. You've delivered 5 resource updates.
Yeah.
But where is that taking you? What's your key strategy around this to deliver shareholder value?
Yeah, absolutely. Okay, so you mentioned before the equity markets are off at the moment. So it has been a tough time, and so what we've some of the things that we've employed that are a little different really are about motivating the team. Okay, so we've been together as a team for a number of businesses so far. So the last one was Alts, and prior to that Torian. And so we know each other well. We're well motivated. You'll see there's very strong performance incentives for the management team. You won't see big wages here. This is all about trying to align interests between the management team and the shareholders' interests. Okay. The other thing you'll see is that management put a lot of their own capital into this business. So it's not just free shares which you typically see out there, although there are some of those, being candid. But I personally and a lot of my peers have put a lot of our own family money into this business, and quite a significant amount, certainly in my case. So it's something that we believe in, that we're really motivated, and that's what I think allows us to generate these outsized progress business plans a lot quicker than the average management team. Okay, getting back to the strategy, when I first sort of founded this business 2.5 years ago, I like businesses that are ready to be in production or a very significant milestone right at the start of these mining cycles. Okay, so a typical cycle is about 7 years, but the last cycle with China growing, we saw a longer, more protracted cycle. Okay, and I think we're about to see that again with this energy transition. Okay. And because of those, when you see these longer cycles, you see bigger upswings, stronger commodity prices, and you've got a longer runway from boom to bust to really generate returns for your shareholders. So a big part of our strategy is about being right at the starting blocks. In 2027 is where we're aiming to be, looking at mining copper out of Mount Chalmers, and we think that'll be right at the start of the cycle.
Wow. Okay.
And we think that's when all this demand will come in from renewable energy, from electric vehicles for copper, and we think that will allow us to really generate some outsized returns for our shareholders. So yes, it is a bit tough out there at the moment, but having been through this, as I said, our management team has been in listed companies for a long time, particularly in the mining space, so we understand the cycles. You'll see that we've been really reining in the cash spend recently. So, but
I wanted to ask you about that, Andrew, because that's corporately you've got, I think, 2.4 million in the bank. And as you say, it's a bit of a tough time. So you being cautious, are you being a good custodian of the treasury? That's what I want to know.
That's right. I think, when I used to run the funds, I would understand if a management team, how do you say this? I would understand if the share price is up, I'd understand, okay? But I wouldn't be happy if the share price is significantly off and the management team was raising lots of capital, okay?
Right.
Because share prices will recover if you don't dilute, significantly at the lows, okay? And this is where I, think deeply about how to really generate strong returns. Being the largest shareholder and having put a lot of my own capital in, I'm really cognizant. I don't want to dilute at these lows.
Okay.
So I'm working on some alternate, strategies to fund this business and maintain that progress, and so that we can make sure that we're ready to go right at the start of the next cycle.
So, what are some of those strategies to maintain that?
Yeah, I can't talk about things that aren't in the market, but what I will do, Kerry.
I tried, ladies and gentlemen. I tried. Just coming in there from the.
Let me talk about just talk generally, not about Q Mines, and just talk generally about some of the
Okay.
levers you can pull. Okay, that was probably the best way to do it. So things like, you're probably seeing some more royalty transactions at the moment. So, there's ways you can do it at the project level rather than the corporate level. Okay.
Yep.
Where they're not subject to low pricing and that sort of thing. So that's one option. There are some groups out there, such as private equity groups, who we sold our last business to, that are really keen to get into these copper businesses, because the cupboard really is bare in copper. There's not many genuine developers out there that I think are going to get to going to be permitted, approved, and ready to go at the next cycle. And so, because there's this real scarcity of quality copper developers, there's actually a lot of interest behind the scenes for some really sophisticated, funds and private equity groups. So there's opportunities for various businesses to look at, smaller placements, but at significant premiums to the current price, those sort of things.
Okay. Sorry to interrupt you, but I'm conscious of time.
Yep.
I want to just find out what it is that you've got at Mount Chalmers, but also I believe that you've made an acquisition. There's different things happening, isn't there?
Yep.
And I want to know, really talk to us about why Q Mines is unique, I guess, because there are a lot of explorers out there. I think our people out there would like to know why they should have a look at this seriously.
Absolutely. All right. Well, I think the key thing is scarcity. I mentioned before that the cupboard is really bare in the copper space. And the best way to explain that is that, if you look at, the ASX peer group, there's only 4 producers, pure play copper producers on the ASX today. Okay. So that tells you there's not many places to actually allocate your capital. Okay. So when the markets come back to copper, and they will in a strong way, because there's a real scarcity of quality copper producers and developers, you generally see an overreaching in price. And I'm just talking generally, but certainly I think there's that sort of dynamic at play here in copper. Okay. The other thing that's unique, and I hope you don't mind, I'm just going to quickly share my screen. I know this is probably a little bit atypical, but
no, that's fine. But while you're just about to do that, it's really interesting, Andrew, because we're talking about copper. I think everybody's forgotten about copper because they're all overexcited about lithium. And I'm not mentioning companies, but some companies have gone absolutely to the moon.
Yeah.
And I don't know, it feels a little toppy to me, but that's
well. Let me just talk about it really briefly, because we've got a bit to cover today. But lithium obviously is right at the infancy of its the business. Okay, it is very volatile. If you look at the price over the last 18 months, we're seeing really wild swings. And there's a lot of groups getting set at the moment. So a lot of M&A happening in that space, which is holding up share prices and things despite a really strong retraction in lithium prices. So it's obviously a really exciting place to be. There's no doubt, and a lot of shareholders have generated a lot of return there.
Yeah.
But copper, I think people have missed it. Like you're saying, it's been a bear market in copper development or copper exploration for not 6 months, for 18 to 24 months. And that's right across the board. That's not just Q Mines. And so what you're seeing now is this deep underlying value in copper that we really haven't seen in a very long time, at a time when I think we're about to see a massive surge in demand on the back of this energy transition over the coming sort of, months and years. So it is a really exciting place to be. And it always takes a bit of, it takes a brave investor to look at these sectors when they're off, like copper is. But I think if you've got the tenacity and you're prepared to be patient, you can really do very, very well in this space at the moment. So
I agree with you. Patience, grasshopper, number one. Number two, as
Yep.
Rick Hall always says, be a contrarian investor. While everybody's looking over to the left, look right. Dr. Copper is here. All right. What are we seeing here on screen at the moment?
All right, so I just thought you were asking about what's unique about this Mount Chalmers deposit. So it's actually quite an amazing deposit, okay? And I will say before we get into it, we looked at 40 or 50 different assets before, deciding to buy this one, okay? So there isn't a lot around and not a lot of quality projects, okay? The first thing you'll see here is it's very shallow, okay? And if the whole premise is you mine from the top down, it's a great place to start, okay? The second thing you'll see is that a lot of the really higher grades are right at the top of this ore body, okay? Now, that's important because it means it pays back cash really quick or debt really quick, generates really strong returns early in the mine life, all those sort of great economic benefits that you have with grade at the top, okay? The other thing is it's very amenable to open pit mining because it's shallow, which will effectively mean it will likely be, and I'll say likely because we're still doing the PFS at the moment, low on the cost curve, which should mean or talk generally, these open pit deposits generally are low on the cost curve and generate stronger returns for shareholders. All right. So the other thing that's worth noting is it's close to infrastructure. Okay. So being a historic mine, it's obviously got a lot of sunk capital on site. That gives us a really low capital advantage. And why that's important for shareholders is it means that there's a lot less dilution when you go to develop this asset. Okay, so you end up owning more of the business when ultimately these businesses turn on. All right, so there's a lot of really unique factors here that you just don't see in any other of these developers. And really the hint is the fact that a lot of the developers out there have been, bar a couple, there's a couple of really good, couple of good ones coming through, but a lot of them have been listed on the ASX for 15 to 20 years, okay? And there's a strong hint there that, why haven't they already been developed, So I think, having only been in the seat for 2.5 years, having delivered those 5 resource updates with another one on the way, by the way, and already, flying through this PFS, and marching down that development path, I think, you can see here we've got a very unique, a very motivated management team at a time when copper's, expected to really run over the next sort of, 12 months, with a fantastic asset to boot. So we are in a great position.
Andrew, you said earlier that you've done 5 resource updates. What's the current resource that you're looking at? I'm just trying to do some numbers in my head.
Okay, so we've got about 200,000 tonnes of contained copper, and the current Australian copper price in Australian dollars is about 12,500 Australian dollars a tonne. So it's big.
So 200,000 tonnes of copper in the ground, about 12,500 Aussie.
Yep.
If I'm correct now, I could be wrong. I'm not brilliant at maths, but that sounds to me about 2.5 $1 billion worth of copper in situ.
That's right. Now,
from your last resource update.
Exactly right. Look, I'm not allowed to talk about that being a company director. Long story, the ASX rules and the job.
Okay. Sorry, ASX.
But there's no doubt there's a tremendous amount of copper that's been discovered here in a very short period of time. So this management team has really delivered again. Obviously, our last business was very successful, having delivered about 700,000, just under 700,000 ounces of gold in 24 months at Alt Resources. We've done it again, and the one hint here, guys, is that we have been a bit quiet at the moment, but this PFS is flying. Okay, so James Anderson.
When's that coming out?
So we've said to the ASX. On the ASX platform, rather, that in the first half of next year we'll deliver this PFS.
Okay.
We've only started about 3 months ago, and I've already got a lot of the key rudiments complete. So we're absolutely flying. Most PFSs take 12, 18 months. Our last business is probably, instead of talking about what we're doing now, because it's not in the market yet, our last business, we delivered a PFS in 6 months and a main reserve statement. So, we're a team that really motors. So, and it looks like we're about to do it again, which is great.
Well done you. But I also want to talk about, so we've talked about Mount Chalmers. Here's the sleeping dog, if you like. I shouldn't call it a dog. But the sleeping one is it Artillery Road? This is like a big belt, and is this outside of Mount Chalmers? A bit of a surprise. I'm not quite sure if the market's picked up on this yet.
Yeah, I'm glad you raised it. So when we sort of were coming to the end of the brownfields exploration around the Mount Chalmers mine, we knew we had to get into the region and start to, if we want to continue to grow the resource inventory. Okay, so in January we flew a very large helicopter survey around the project, and I must admit we were a bit nervous at the time because it cost us about $500,000.
Holy moly!
On a survey. And you never know if these things are going to work, right? So it was a bit of a punt, but it was an intelligent guess, because these VMS deposits, and I won't go into too much detail, but they're known to cluster. Okay, so you generally find between 5 and 40 of these deposits in a cluster. Not always the case, but that's a typical sort of situation. So we knew it was likely there'd be more of these high grade VMS deposits out there, like Mount Chalmers. And so when we flew the EM survey, we came up with 34 of these deposits. And sometimes you need a bit of luck, as you would have heard me say in Noosa. But we actually, the first drill hole into the very first one of these anomalies basically came up. So we've made a brand new discovery at Artillery Road, as you alluded to now. It's big. I've just had 2 site visits with 2 lots of investors up on site the last 2 weeks. And we walked over the ground, and I'm telling you, it's enormous. So it looks more like a skarn, and all this is public information. We've obviously done our first program, about 13 drill holes, and we've got really obviously, as well as being big, we've got chalcopyrite, which is copper. We've got sphalerite, which is zinc. And some other metals in there. But what we're seeing is it's really increasing with grade as we head southwest. So I'd encourage all your listeners to have a really good look at the recent announcement on Artillery Road. You never get right in the middle of the system, the first drill holes.
No.
Those last couple of hits heading southwest are heading towards a really large, what we think is a big intrusion. And it's big, and the grade's increasing, and it's bloody exciting. So
that does sound a little bit exciting. But so you think this is a new area, it's a big system. Is it all part of because it's not that far away from Mount Chalmers? Do you think this is one big belt of copper that you possibly locked onto?
Yeah, we do. So we're really lucky that we were first movers in this space. So after buying the Mount Chalmers mine site, we've then gone and added significantly to the package over the course of the last 2 years. So we've basically got the whole belt sewn up with 100% owned tenure. And more recently, we've obviously acquired the Devlin Creek project, which is about 90 kilometres northwest of Mount Chalmers.
Okay.
So we really have the whole belt under tenure. And so with 34 more anomalies to go, and obviously a lot of brownfields step out drilling to continue to deliver. This is going to grow. There's no doubt in my mind. It's going to grow, and it's going to grow rapidly. Obviously now we're moving into the region, so we've got to do a bit more targeted exploration. But it's a really exciting time to be a shareholder. There's no doubt.
Okay, we are running out of time. I just want to ask you one more thing, and that is, right at the start, we said you were a zero carbon mine developer.
Yeah.
Is it? I might get slapped for this one, but is it really that important, or should you be focusing on that? I just want to know why that's such a big deal.
Yeah, look, good point. I know there's some conjecture around about this ESG, whether it's right or wrong and whatnot, especially within the mining industry, where we've traditionally relied on things like coal and oil and gas and whatnot. So I do understand it, but I think it is heading down that path, and my sense is that and we're starting to see it now with some of these first deals, that you'll actually start to get a premium for your
okay.
price. if
That makes
you
sense.
can demonstrate that it's either low carbon or zero carbon. So there is a strong economic benefit, and believe me, we're talking to all the traders at the moment. As I said right at the start, the cupboard really is bare in copper, and there's a lot of demand out there. And I think we're going to, there's potential here to actually get a premium as this sort of energy transition plays out, which will obviously deliver more return for our shareholders. So, but the other soft part of this is the fact that growing up, my father actually had a water and an energy sustainability business. So, so I was sort of really.
He was ahead of his time.
Yeah, he was, and he did a great job. Had a very successful business. Had a lot of plumbers, electricians running around Sydney. And so while I was at uni and whatnot, I was working in that business, installing a lot of these systems. And so it's for me, it's been a very simple transition to decarbonise the site. So it's a really important part of the way I want to run this business. It hasn't cost a lot of money, and I think there'll be a strong economic benefit down the line. So
part of your DNA. All right, quickly,
right.
Andrew, because we are out of time.
Yep.
Give me 3 reasons why people should be sitting up and taking notice of Q Mines right now. I think you've outlined it really well, but I just want to kind of summarize it and go, you out there, audience, sit up, take some notice, and here's 3 reasons why.
Yeah, sure. Okay. First one is the fact that copper is off at the moment. So the whole premise is buy low, sell high. It is an amazing time to be buying copper opportunities. Okay, they're off. Okay, everything from the producers down is being absolutely smashed. There is deep underlying value in copper right now. Okay. The second thing is we talked about it during the presentation. We've got very unique assets here. Okay. They're open pittable, and do not underestimate open pittable material. It's going to be low cost.
Yeah, I agree.
We've got really high grade. We obviously don't know what the economics say yet from this PFS, but my assumption is it's going to make a lot of money. Okay. So, and the third thing is the fact that there's this real scarcity in copper. I keep saying this phrase, the cupboard's empty. There really isn't much coming through, particularly in Australia, and that will, when the capital markets do come back to copper, it's going to run, and it's going to run really hard. So I'm excited about it. I'm a very large shareholder. We're putting a lot of my own money to it, and as soon as I'm not behind the wall, I'm a buyer. So it's definitely worth watching. There's no doubt.
All right, Andrew Spark, Managing Director of Q Mines, clearly up here in Queensland, making sure that he gets the right assets at the right price at the right time. Lots of work still to do, but 5 resource upgrades only listed just over 2 years ago. So they certainly aren't letting the grass grow under their feet. But more importantly for you, my beautiful audience out there, Andrew has skin in the game. And I've often said to all of you that it's all about, it's not just the asset that they're looking at, but you've got to look and make sure that the right steerage is at the front and that they have skin in the game. Andrew Spark, Managing Director, thanks so much for joining me on Making Money Matter.
Right. Thanks for your time, Kerry.